Hello, Warriors. Let's have a great week. Everyone ready? Hello, Mike. Bran, how are you? I don't know if the markets have never seen this before. A lot like the 70s, but you're right. Israel and Iran were not exchanging weapons. Oh, yeah. Are you going to be sawed in half today, Sinatra? Are you going to be sawed in half? Okay. Andrew, Paul, Patrick, AJ, Ryan's here. Mike is on, yeah. Marcus, K-Man's here. And Ingmar, Ingmar thinks it's funny to be sawed in half. Uh, anyway, Adam, how are you? Let's go to work. So this has been my target in cable for a long time, this speed line. But the lesson is you don't just buy a line unless you see the market reacting to it. So I'll start off with Ryan, and wow, in 2 days, Ryan, this euro pound has absolutely exploded.
Yeah, well, exploded for that pair.
Yeah,
Yeah, it's gone up what 30, 40 pips over where it's been languishing. But yeah, good strong move. Thanks to BOE's Ramsden, and yeah, you got your 123s in cable, mate. Nicely shouted as always.
yeah. I'm not buying it here though.
No, we've been talking about that, haven't we? That you want to buy it when it's trading 127, but when you get
Yeah,
down here, you think, okay, well, what's changed that's driven it down here? I don't know. I think you might be all right if you wanted a little dabble at 123, a little small trade.
yeah, it
We've come
might
a hell
be.
of a long way just for the comments from
Yeah,
Ramsden last week.
yeah, really. They took it to the woodshed. So let's see. I mean, I can't even short-term stuff is confirming this low, so I need to see a bounce and then another low,
Yeah,
something like that. Euro still, hasn't taken out its 106.10 level. Um, Still waiting for that to happen. So, I mean,
yeah,
if Euro can go like, 105 and a half or so, where do you think cable would be then? 122 or so? Because
yeah,
this
probably
was
122s.
61.8 here.
Yeah, yeah.
Okay, Bramsden's.
We're seeing them both go at the moment. The pound went first, and euro dollar was doing nothing, but now they're all
Yeah,
picking up speed. But it's a bit of a weird one because it's not all dollars are going the same way. You know, Aussie's
yeah.
holding up a little bit better. Dollar CAD's looking a little bit weaker. Gold's just taken a bit of a tumble. Stocks can't get back through 5K. It's one of these messy Mondays. You know, when you look at it and you go, I don't know who's playing what tune in this market at the moment.
Well, I tell you what, I'm going to buy the next new low in Aussie because I have one, I have two, and if I get one more shot down under this low and we're putting in a higher RSI reading, I'll give that a shot. How about yen? It's just, grinding.
Glued. It's another
Yeah,
152 situation.
yeah.
154.80. It can't even trade 154.80 after a few attempts. So there's obviously some sort of bust parks there as well. And here we go again. The do we, don't we, ahead of the Bank of Japan on Friday.
Yeah. Okay. Even though the S&Ps are getting a bounce, I think that this is, probably just a little bit of a relief rally after we basically had what we have 365 handle decline. I mean, halfway back's going to be, 51 or so. Because I think that it's pretty logical that we'll get a test of the 4,800 breakout. But we could rally first, maybe this is A. The bulls will probably say this is all of it and we're going to new highs. I think we rally, and then even if it's a bull case, we pull back to around this level, and then we'll see. I think that's going to be pretty important. And big bond announcement, not this week, came in. Good morning to you.
Hey, good morning, Dale. Good morning, everybody.
Big
About
bond refunding on May 1st, I believe.
Is it on the May the 1st, the announcement?
I think so.
Well, I was out and I have not really checked it, but we do have a decent offering scheduled this week again. More the belly and the short end, 2, 5, 7 years in there as well. I Yeah, I need to look it up, Dale, when the
Okay, that's okay.
fund announcement is for the next quarter.
Okay,
Is it for the next quarter then? Then it should not be right now, is it?
okay.
But okay, I'll look it
Uh,
up. Yeah, I
all
think
right, so go ahead.
yeah, I think the cable there is we're in for a test of that 123 now. Ramsden after Bailey is the second one who thinks that inflation is on its way back to their 2% target. So Ramsden even said on Friday that they could see the close to 2% for the next print. It's a bit of a hefty, a bit of a big call, but yeah, we see, as I was saying on already a few times over shows, how emotional this market can trade sterling at times. So sterling really got
Yeah,
hit. The rest is more like no more misery in the Middle East on specific FX pairs like Euro Commods, Euro Canada, despite lower oil. Those crosses are trading lower, which is a bit typical of risk on moves as well. But it's all like as we were talking, correlations are um, really random at best. Canada has not been following any oil correlations at all during the whole scenario. We could have thought at one stage, but it did not. Um, yeah, and McClem is a bit on and off weather vane of late. So I was looking at that Eurocat this morning, and I said like, well, perhaps I'm trying to sell a rally, but there is no rally, it's just going off. So, but I'm a little
yeah,
short sterling again. Looks like the market has picked his side now. I think sterling is could be heavy for at least until like Tuesday, Wednesday.
okay. Does this surprise you? I know this is the one that you follow, the 2 year.
No, I'm not. We're here. We were talking about those yields this morning as well on the Flow Show. To me, they could hang around here for a while until we see the next set of data, perhaps to the end of the week when we see the those GDP numbers, PCE numbers. But if you get another sticky one, it's probably we are probably going to go back up to 535, where the Fed funds middle is hanging around. It could go back up there, and then we are going to see the tens and the long end closer to probably closer to 5% again. That's all within the possibilities. But I think it's good enough that those yields are holding up here to keep the dollar on the better side of the spectrum still, until we
Yeah,
see data in the US turn around. But for me, the
yeah,
bigger data is not even good. Well, I mean, the market will of course react to inflationary data, but to me, what's really going to turn around the dollar, not like having those intraday blips and pendulum swings. To me, what would really turn around the dollar is weak job reports. If we start to get weaker job reports, then the party may be over.
yeah. Because fundamentally now,
Hmm.
it really, the fundamental argument is, definitely with the dollar on interest rate differentials, with Europe looking to still ease maybe in June, and now
Yeah.
you even said we may not even ease. So, the bulls, which it's crowded, right?
Hmm.
Have every fundamental rationalization or
Exactly.
reason to favor the dollar.
Exactly.
That's why I'm looking for a dollar top, because
Hmm.
now they have every reason in the world. they weren't looking for this move in yields. Okay.
Mm.
So, I think that dollar bears have been, pretty crushed. Have tried it a few times on, weak data.
Yeah.
And I'm getting ready to take the other side.
Well, that's the thing, but timing wise as well, it could start to the pieces of the puzzle could start to fall into place as well. But really, I think still the dollar bills need to be patient, because it could all happen, towards the end of Q2, and now we're about we started Q2 in all earnest. But yeah, I think get a bad job report, it's going to be enough for the bulls to have a real scare and the bears to try and take control again. But until that happens, even if the positions are crowded, they may be right, because it's still the problem. When you're short dollars, you're paying funding away straight away. You're paying carry away straight away on most of the currencies. So it's still a tough trade for me to be short dollars, right now. But if I see the numbers starting to tell me that I have to, then I won't hesitate.
Okay. Just because there was no, things settled down. I was thinking 2250 or so down here.
Gotta get
And
that 23.20 first.
yeah, and silver 26 and a half. I mean, it
Yeah.
could be there. So if it has another day like this, it's already there.
Yeah, Stella and I have both identified the 26.20 as a decent level to start.
Yeah. Okay.
Adding on what we let go up closer to the Reddit highs.
Okay. All right.
I think we are in a bit of a dangerous week for the yen now. We've heard all those comments. We've heard Ueda as well saying about inflation. We have the Tokyo inflation later this week. We have Bank of Japan. And there is this, it's not the base case at all for the Bank of Japan to do anything, but I think we cannot totally rule it out. And that's going to keep, I guess, the market on their toes a bit. And I was saying this morning, if we think that sterling is going to remain a bit weak, and if you don't want to stand in front of that grinding dollar yen train, if sterling remains a bit weak, sterling yen may be a play for those who want to give it a try on the cash side for an intervention also play if this blows up 155 towards 156 in the dollar yen.
Okay. Yeah. I've seen targets 57.80.
Well, if they don't do anything, we're trading 160.
Okay.
If they don't do anything, but the thing is, they might, and they might any day now.
DOJ's this week, is that the biggest market mover in your view this week?
It shouldn't, because they moved last month, but I think there's going to be nervosity around it. So it is going to move things. If they don't say anything, if they don't do anything, then dollar yen is probably going to try higher, and that may spark interventions then. But I think this week, especially after what Ramsden said last week, I think to me, the potentially bigger mover this week will be sterling, because we've got more Bank of England speakers. We got the PMIs tomorrow in sterling. We do have a bit of sterling stuff coming out this week as well. I think sterling this week is potentially a decent mover.
Okay. Blake, are you working today?
I'm here. Good morning.
Yeah, I know
Early morning.
I know you didn't have much sleep after the weekend.
It's one of those nights on a plane where you're supposed to get in at 9, and by the time I got into my home, it was like 11:30, and the 3 o'clock hour came pretty early this morning. So you always have that problem for those people that have ever flown through Texas. This time of year, there's a lot of delays. bad weather, a lot of storm clouds. So yeah, finally made it home. I am a little tired. I'm going to be quite a train wreck tomorrow, but it's interesting. We got some really big moves while I was gone. Dale, if you don't mind, I'm going to take over the charts for a second. I got a few things I'd love to talk about.
Yeah, I thought about you when the S&Ps were falling apart and you weren't here.
Well, it wasn't just it
right.
wasn't just that though. We had I guess here let me just pull up the dollar mex. I think is probably the best one because
wow, what a spike.
Yeah, I happened to be at the bar when this all went down. There was the Israeli I guess response, right, on Thursday night. And so we saw this big spike in the dollar Mexican peso. I ended up getting limited out of a bunch of stuff. And a couple people text me and they're like, oh, wow. I got those type of texts. And next thing I was like trying to close out of everything. I was sitting at the bar as everybody's ordering their drinks because we just got bit in from dinner. It was, soccer families and, the parents, we were all together for our last hoorah of the season, if you will. And these, I was short Aussies. And so I got out on this spike down here. I closed, if you're in the chat room, I jumped in the chat room and I said, I'm closing out all my dollars here. I got out of the dollar mex around 1750 something. It was like 56 or something like that. And so some really big moves, which sometimes those do happen when I'm traveling, but it seems like, going into Friday, we did see the stock market sell off and we saw everything just kind of, I was just telling everybody in the chat room, the move on Friday felt like a little bit of a washout. And I don't think that the stock market is done going down. And Dale, I'm going to echo your sentiment because I feel the same way. I don't think that stocks are finished going down in this leg lower. We had your garden variety 5 to 10% correction. I think we corrected about 6.7% from the highs, something like that. And we're probably a little oversold right now. So I think there's going to be sellers on rallies. I don't think that this sell-off is over yet. I think we will see 4,800, as you mentioned. I think this 4,840 level is the 38% retracement. It's the big breakout point that looks like it's going to be tested. If not this week or next week, probably here over the course of the next, couple of trading weeks, I would think. And you probably want to look to sell rallies. I mean, the 50 DMA is up here around 5,100, 5,120. I think that looks like a decent level to be on the short side. And where we're at right now is a little trickier. It is a little trickier trade, but I do want to point out just a couple of things in FX that does have my attention. Aside from the big spikes in the dollar Mexican peso, if you look at the Rand, the dollar Rand completed its inverted head and shoulder pattern that we had been discussing. It did get to the top of the triangle and a little bit of a false breakout. So again, these are some of the things that you see that you're like, I don't know if I want to chase the market lower here. I don't think currencies don't feel like they're ready to do so either. And as you guys were just talking about sterling, yeah, we're getting close to that 618 retracement. We do have, I think it eventually extends itself down towards 122.50. That seems pretty logical, maybe even as low as 122 to complete the range extension. But we are getting to levels where you have to question, do you really want to chase it down here? So I think the next couple of trading days are going to be pretty interesting because we do have, as K-Man, you pointed out, we have the Bank of Japan, which and Ryan said a little bit earlier, we can't even get into the 80s. I mean, we might do it today and finally press that 127% extension. I think if stops go off, we should trade to 155 and some change. But we also have, the PCE later this week. We have earnings this week. I think Tesla is tomorrow. Oh, I got to show you a couple other things, Dale. You're gonna like this. Take a look at the semiconductor index. We've been talking about the head and shoulder pattern. It finally completed on Friday, right? You have Apple that just reached for, you know, the range lows basically, and we closed below there. We're gonna gap higher this morning, so you got to be careful about that. And then we got like Tesla earnings this week, tomorrow, I believe. So which is, you know, I mean, Tesla looks like it's, you know, continuing to get
Looks like
destroyed here.
Apple.
Yeah, and as I pointed out, Apple, we broke down on Friday, but we are also gapping higher this morning. So you got to be a little careful with that. That you know, hopefully we don't get some sort of false breakdown, because then that's going to squeeze, you know, some people in Apple, at least for the week. And you know, Friday's lows got to be taken out in order for Apple to continue lower. But like I said, after as big of a correction as we've seen from the highs over the course of the last, you know, week or two, I would be a little careful being too aggressively short, again, with the PCE coming in at the end of the week. So we heard K-Man's thoughts on the Bank of Japan. But Ryan, what are you looking at this week? What's the big, I know you, and by the way, I haven't even had the chance to watch the week ahead video because I was traveling all day yesterday. So I didn't get a chance to watch it. So thank you, Ryan, very much for putting that together. If you guys haven't seen the week ahead video, I'm actually going to watch it this morning right after the Morning Edge show, which is a private show for ForexAnalytix subscribers. But what are you going to be listening to or watching for? Sorry, say listening to. I'm working on 3 hours of sleep, buddy. What are you going to be watching later today?
Later today, not an awful lot. We've got no
This
data
week.
out of note. Yeah, we got a bit of data. We've got all the PMIs dropping tomorrow. So that's going to be a big watch, obviously, to see the latest economics. Australia CPI on Wednesday, GDP on Thursday, US Q1 GDP Thursday, and then, like you say, PCE and the Bank of Japan, which could be a bit spicy because a couple of hours beforehand we get the Tokyo CPI, which is the latest data for inflation, and that's expected to drop back in the core once again to 2.2%, which is awfully close to the BOJ target. So if that comes in worse than expected on Friday, that could see the yen doing some fun and games before the BOJ.
All right, yeah, and that Tokyo CPI comes in, looks like about 3-4 hours before.
Yeah.
Well, I mean, you know, roughly, since it's a little random. Now, you talked about the PMIs this week. You look at the euro. The euro is really struggling here. I mean, you know, last week we were looking for rallies to sell into, and we did. I mean, I know I was short. Is one of the positions I got aggressively short euros up to the sport. You guys can see the chart, the way it's drawn out. That's the way I played it last week. But I closed it out on Thursday, you know, on that spike when we got the dollar spike. But we're really struggling to get above 107. I mean, you know, if we don't get above 107, I mean, where are we going to go here in this euro?
You know what,
This looks
Blake?
easy
I was
trade in
thinking.
the world.
Go ahead, Ryan. I'm sorry.
Sorry, mate. No, go. You go on.
Well, I was thinking that the euro, with everything that was thrown at it, I'm not saying we're not trading 105. I'm still looking for that, but you had higher yields. I didn't see much safe haven buying on, you know, in the dollar when we had risk off, pretty serious risk off in the last week or so. You know, the big break was on the CPI, and yields, you know, keep moving higher. And I think the euro's kind of stubborn here. It kind of reminds me of how gold was acting when, you know, the kitchen sink was being thrown at it with higher yields. And euro, I think, is behaving good. So I would have expected we'd already be at 105 with the kind of risk off we had, you know, from 52.80 to 49 and a quarter, whatever. 49.80.
You know, Dale, I hear what you're saying, and I think the common I don't want to say the common. It's like the misconception of oh, when stocks come down, the dollar catches a bid. I think we need like pretty aggressive sell-offs for everybody to be like, all right, fine. I'm gonna buy dollars and I'm gonna sell everything else.
Oh,
The
okay.
the euro, I do agree with you. I think it's done very well considering the divergence in expectations of what people feel that the Fed's going to do versus the ECB. But as Ryan pointed out, we have the PMIs tomorrow, which if that European data comes in, I thought I knew it was this week. I wasn't sure if it was Tuesday, but PMIs always fall on Tuesdays anyway. Mostly the majority these Eurozone ones anyway. This is all going to be some pretty big data that hits the market tomorrow. And so if the data continues to underperform, then I think that's what's going to weaken the euro. The situation where you still have growth really anemic. But if you look at the euro crosses, Dale, this is where all the euros getting smashed right now. Like look at the euro Canadian. I mean, we're getting back down towards pretty key levels of support. Euro Kiwi can't break out. Even as you pointed out, Dale, sell off in equities. Some of the euro crosses usually look pretty good. Euro Aussie hasn't been able to do much. Euro Kiwi hasn't been able to do much. So I don't know. I still think it's a growth issue or at right now, but still the euro looks better than you would think. So I mean, K-Man, what do you have to say? What's that?
That's because of the bond markets. They all still trade the bond markets as one big pot of net. I mean, it's quite incredible, actually, specifically today when people look at correlations being thrown out of the window. You've got like people at the ECB saying June is a done thing, then people at the FOMC now putting in doubt that they will even cut this year, yet the bonds were going faster down than the bonds. I mean, it's a bit crazy, those bond markets, how they react right now. And that is behind why this euro dollar is just stuck where we are right now, because the bond market is just one big thing between those two at least.
Yeah, and you got boons. Yeah, as you're pointing out, boons are underperforming. So German yields are ripping right now, and then and the 10-year, kind of the same thing, I guess. But we're outpacing. Yields are outpacing in Germany. Crazy, right? Just some crazy moves. K-Man, since we just have a couple of minutes, what are you looking at this week? I know BOJ's big on your radar towards the end of the week. Anything else that's really got your attention?
Yeah, the sterling, and then a bit similar to you, like the Canadian dollar. It's may have run its course to the downside as well, because I'm looking at it through the crosses, and it is actually behaving pretty well despite crude and energy coming back down. So that's going to be on my radar as well. Yeah, and then those sterling data and sterling Bank of England members talking. Yeah, that's about it. I think the main reason why dollar yen is not going through 155 is that the market is scared of interventions. It's like, are you going to buy it here? Why would you buy it here if the risk is for them to intervene? I think this week actually. I would not even be surprised if dollar yen, or at least yen pairs, do not advance further ahead of the Bank of Japan. And let's say I would not be surprised. And then we pick up the thing again once we heard from the Bank of Japan. Because on Friday could be really hot. I mean, imagine that they don't do anything, and MOF may be forced to intervene, right?